All right, Gallup, New Mexico. Hey, it's Jason with Coldwell Banker High Desert Realty, and I wanted to thank you for joining me on this episode of Going Deep with Gallup Real Estate 101. Today, I want to talk to you about the costs to buy a home. That way you don't get caught off guard when you go to make your purchase. You're a little bit of aware of what's going on. And stick with me until the end, and I'm going to share with you how you can offset some of these costs to keep more money in your pocket when you go to close. So let me just start off by letting you know that there's a big myth out there in the community, and not just in the community, nationwide, that there's two things you need to buy a house: a 780 credit score and a 20% down payment. What I want you guys to know right off the bat, neither one of those are true. As a matter of fact, 53% of the loans that were written in the last year were written to credit scores of like a 720 on down. And so the first myth, you need a 780 credit score, just not true. And I want you guys to be aware of that, because if that's holding you back from getting into your house, you're missing out on a great time to buy a house. The second thing I want you to be aware of is 20% down to buy a house. Don't need it. There's a variety of loan programs out there. Some of those we're going to talk about that some of them are zero down programs, but 20% down is just a myth, and I'm going to talk to you guys about that anyway. So for the purpose of today, though, the cost to buy a home, and I'm going to use simple numbers, guys. If you guys know me, I am not the sharpest tool in the shed. So for today, we're just going to talk about a $200,000 home, because that makes the numbers really easy for me to do in my head as I'm talking to you. So what I want to let you guys know is I've got these costs kind of broken down to three categories for you. Pre-closing and inspection costs, closing costs at the bank, and then down payment costs. And we're going to go through each one of those, so that way you're armed with the information when you go to put an offer in on a house, and you're familiar with what you need in order to get your financing approved. So what I want to let you guys know, sometimes we get into pre-closing and inspection costs, which catches people by surprise. And I want to prepare you with the way I saw it generally. In most, there's three costs that a buyer has to be ready to pick up when they are buying a house and when they are going under contract. That first cost, I'm going to tell you, is earnest money. And earnest money is usually 1% of the purchase price of the house. So in this particular case, we're doing a $200,000 house. That means earnest money is usually $2,000, but we also have, we can negotiate down to $500 or even $0 on your earnest money. Now, I want to let you guys know your earnest money just doesn't disappear. What the earnest money is there for, it's so you have some skin in the game and the seller is confident that you're wanting to move forward with the transaction. At the end of the transaction, this earnest money goes towards your down payment or towards your closing costs, or depending on the loan program, it can be refunded back to you. But if you are shopping for a house, just understand right in the beginning, you're going to need some earnest money. That can be as little as $500, typically 1% of the purchase price amount, just so you're prepared. The second inspection cost that catches some buyers by surprise is the home inspection cost. And this can be a cost of about $450. Now guys, I want to let you know a home inspection is not a requirement to buy a home, but we do highly recommend it. The home inspectors go through, they give you a good general inspection of the home. They crawl up in the attic and under the crawl space, and they have a lot more knowledge than even I have about what could be wrong with the home and stuff. At the end, you get a great report that just tells you not just efficiencies they found in the home right now, but also things to watch out for the future. And so I really think the home inspection reports, especially with a good inspector, are going to do a lot to help you get the most out of the house. The other cost that you just want to be aware of on pre-closing and inspections that buyers normally pay is an appraisal cost. And what the appraisal is it's the bank's way of making sure that you're not overpaying for the house and that you're getting a good fair market value or better on the property. And so appraisals are a lot of times asked for upfront by the banks, and you just have to be prepared for a cost of about $600 to $700 for your appraisal in order to move your loan transaction forward. And so just understand that that's an upfront cost. The banks don't pay for the appraisals. They used to, but they don't do it anymore. And so just understand that you might have a $600 or $700 appraisal cost going up right in the beginning. So just be aware of some of your pre-closing and inspections costs, because that can catch you by surprise on the end. Now, I want to talk to you about closing costs really quick, because a lot of people get a little bit confused on what are closing costs. And a lot of times they see a thing, I guess it's paragraph 10 of our purchase agreement, they see a closing fee at the title company and they think that's closing costs. What I want to let you guys know is your closing costs are what the bank charges you to originate your loan. Sometimes they're called bank origination fees. You see things like doc prep fees, tax and title searches, title commitments, title insurance. These all get wrapped into your closing costs. I want you guys to know that closing costs need to be paid above and beyond what your down payment is on your loan program. So for example, if we're doing a $200,000 loan and your closing costs are, let's say, 3%, that's $6,000 of closing costs that in order to close on your loan transaction. So just be aware, that those costs get added to what your down payment requirement is, because again, we just don't want you to be caught by surprise at the end of the transaction. Last but not least, I want to talk to you guys about the down payment requirements of a variety of different loan programs. Remember, I started off the video talking about you may not need any down payment in order to get your down payment or to buy a house. So it depends on what type of loan. Out here in Gallup, guys, we are able to use a USDA loan, which can be a zero down loan program, in which case you would only have to come up with your bank's closing costs. You can use a VA loan program. How many veterans do we have out there? I know there's a bunch of you. That can be a true zero down program. And again, the only thing you have to worry about is your bank's closing costs. FHA loans, so just so you're aware, on a $200,000 home, FHA is going to require that you put 3.5% down, so that comes out to about $7,000. HUD 184, which for a lot of folks who are named to the HUD 184 loan, which only requires a 2.25% down payment, that's going to be $4,500. Somebody can check the math on me and tell me if I did good on that. But HUD 184 only requires a $2.25 down payment in conjunction with these other costs. Conventional loans can range between, actually I have 5% up here. There are some 3% conventional loan rates, and they go all the way up to 20%. So if you were looking at a 5% on a $200,000 home, that's going to be about $10,000 a down payment, and of course 20% would be $40,000. Again, your down payment is going to depend a lot on the different types of loan programs that you have, and if you're doing a conventional 20% down, that's the only time you would need 20% down. But there's a whole bunch of other loan options that might be available for you to get in for a lot less. Now, that being said, I told you at the beginning of this video I was going to give you a strategy to offset some of the closing costs when you go to close on your loan. And one of the ways to offset your closing costs when you're buying a house is to negotiate with the seller on who's going to pay those closing costs. Let me explain. If I have a $200,000 house that I'm going to, let's say, offer $190,000 on, I'm going to be responsible for paying very close to these $6,000 of closing costs. But one of the things I can do in the negotiation is ask the seller to pay some of my closing costs. So let's say, for example, maybe I didn't beat up the seller too much on the $200,000. Maybe I offered the seller $196,000 for the sales price of their home, but I asked them to contribute up to $6,000 of closing costs to my family and my loan. What in fact you're doing is you're eliminating having to pay this right up front. And let me share something with you. Currently at about a 4.5% interest rate, the $190,000 you were going to offer would have meant that you had to come up with this $6,000 all by yourself. But if you ask the seller to pay this amount, the $196,000, the $6,000 of closing costs, at a 4.5% interest rate, this is only going to make a difference to you of about $30 a month. Now, this might not be exact math, so humor me, guys, but what I do know is that at $30 a month, it would take you 200 months to save up the $6,000 that you needed for closing costs. So this number, this closing cost number, scares some people away sometimes. But if you have a good agent who's using some strategies for you, maybe you can get the seller to pay for your closing costs. So let me give you an example. If I was going to do a $200,000 purchase, if I was going to use a zero down USDA or VA loan program, I don't need any down payment money there. I ask the seller to cover my closing costs, and I negotiate with them on the price to make that attractive so they'll cover my closing costs. That means I might need $500 of earnest money, $450 for an appraisal, and $450 for a home inspection, and maybe $600 for an appraisal. I might be able to get into my house and start building equity, start giving security to my kids, and really start just enjoying the benefits of home ownership for less than $2,000 down. So anyway, guys, I'd love to hear your comments. Share with me down here below. Let me know what you think about it. If you think you have somebody that you know who wants to buy a house or whatever, and they're unsure, maybe they think they need 20% down, share this video with them. Let them know you can get in for significantly less money down than what you're thinking about, and you want to be sure that you're using an agent who's going to negotiate well for you, maybe to offset some of these closing costs. So share this video, give me the comments below, let me know what you guys think. Until next week, guys, we'll talk to you later. This is Jason with Coldwell Banker High Desert Realty. Take care. Bye-bye.